So in the last video, we talked about a bear flag setup on both QQQ as well as the S&P 500, and we were looking for a retest of the upper end of the bear flag, and that's exactly what we got last week. You can see right here, the bear flag, by the way, is this blue trend line as well as this blue trend line. You can see we've been contained within it for a while now. We retested the top of it, and we had some type of rejection followed by mini consolidation for the rest of the week. And what I'm personally looking for is a breakdown from this bear flag. It is getting a bit lengthy now, so I would like to see that take place this week. Otherwise, this is going to turn into a new uptrend. And what would need to take place for a breakdown to occur would be a break below the lower end of this bear flag, this trend line right here. We need to see a break below this, and I can extend it out as well for you to see a bit better. But we need to see a break below this, especially around this 437, 436 range, to confirm that there is a breakdown of this bear flag, and then two, that there will likely be continuation a lot lower. We see some type of a flush move. So that's something that I'm watching for. But of course, like I just said, we need to see confirmation below this trend line. A positive development to that thesis from last week was Friday. We had a gap and crap scenario. If you're unfamiliar with what that means, essentially it's a gap up to start the day, followed by almost immediate downside after to fill the gap very quickly, and then close either lower than the previous day's close or about flat, which is what we had by the close end of day. That is a characteristic sign of not only weakness intraday, but also a predictor of future weakness, because this shows that bulls were not ready to break out of this consolidation zone, and they were not strong enough to have continuation to the upside, which typically means it needs to be rebalanced with lower price discovery first to see if bulls are ready to bid it up yet again. That's just the characteristic outcome of something like this. So I would expect us to retest a bit lower here, about the lower end of this bear flag support, this trend line that I just showed you. So I would not be surprised to see that. However, bears still need to step in around the lower end here to take it under, because that's everything. Otherwise, we just continue to chop in between both of these trend lines and continue with a possible uptrend if it holds past this week. So this is something I'm watching for, this retest over here this week, followed by a breakdown, and we could have more downside afterwards. Pretty similar setup on the S&P 500, except this is showing relative strength in comparison to QQQ. The reason I know that is, well, one, we don't have that consolidation, or at least that mini consolidation that we saw last week on QQQ. It's just been within an uptrend. And then two, if you look at the bear flag here, very similar, both this trend line and this trend line, we actually broke out to the upside. And this is something key to note, especially for a lot of retail. Just because you have a pattern that's called a bear flag, or maybe even like a characteristic bearish pattern like a head and shoulder, doesn't mean that 100% of the time it needs to break down and have continuation to the downside. It is a valid pattern that you can base risk on, which is the importance of this, because you can understand that there's a higher likelihood it rejects when it retests the top end, like you can see over here, like you can see over here, etc., etc. However, there still can be, like you can see over here, a breakout to the upside. So this is just something to note. Just because it is characteristically a bearish pattern doesn't mean that it has to play out in that way. And that's why I always advocate for using other variables at your disposal. That can be something even as simple as flow, something like dark pool. If you see a lot of dark pool activity near highs, kind of like what we saw, if you remember, if you've been watching these videos for a while, back within this distribution range, we saw a bunch of $3 billion plus signature prints on the daily before it went to the downside after. This was essentially institutions dumping before we had this downside move. So far, we haven't actually seen that on the S&P 500. If you check here, this is filtered, by the way, for all of last week for dark pool premium. We had 1.7 billion, 1.1 billion, nothing too insane there. Again, I'm looking for like 3, 4, 5 billion plus in signature dark pool prints. We haven't really seen anything to that extent as of last week. 1.6 billion, 933, barely anything right there. And as I scroll down, the largest from last week was a 2.2 billion order here, followed by a 1.7. So you could add both of those together since they're about a 1 cent difference, but still nothing that's consistent every day above a certain amount, and that certain amount being 3 billion, 4 billion, 5 billion plus, etc., and then 2 billion over here at 511. So again, nothing too insane last week, and that's something that bears need to see in order for there to be some type of distribution up here, like we saw, like I just said, from back here, and then we can see a downside move play out. And as a result, this has shown a lot of relative strength so far. So one thing I do want to note for early this week, we are technically within a mini bear flag. I know it's kind of confusing now because I've now talked about two bear flags, but we're in a mini bear flag on both the S&P 500 as well as what I just showed you here on QQQ. And I can draw that out really briefly here, but you can see there's a mini bear flag on both of these just based on the close. And with what I just told you about a gap and crap, with there likely being some more downside price discovery before it decides where it wants to go, this is probably going to have a quick downside move to start the week. So don't be surprised if there is a breakdown from both this QQQ bear flag as well as the S&P 500 one. However, everything is dependent, like I just said, on the retest of the lower end of the bear flag. What happens when we retest here? Can we break back below? Because so far, for all intents and purposes, we haven't broken below other than during FOMC. But of course, FOMC is kind of expected for there to be more volatility. Other than that, though, we bottomed around the middle of April. It has stayed within this bear flag all the way until now. Again, it is getting a bit lengthy. You don't want this to turn into an uptrend, a channel to the upside. So we do need to see that closure soon with whatever side it decides to break. But this is everything right here. So again, don't be too surprised if we do see a breakdown. The critical breakdown is under this flag right here, and similarly on the S&P 500 will be a breakdown back within its previous channel / bear flag, right around here around 518, 519, because if we can break down back below, this would make all of this from last week a fake breakout above this bear flag. That'd be very bearish, and we'd almost instantly see lower price discovery to around 513 because it would need to revert back to the lower end of the bear flag, just because a fake breakout shows a lot of weakness. You typically see lower price discovery after weakness is shown in the market. So that's just a couple of things to note for this week. Something else we saw last week just based on flow. If you look over here at SPY's flow, we actually saw an uptick in overall put flow. This is filtered for over 500,000 in premium. You can see here a very uncommon as of lately, 79% puts to 21% calls. Now, of course, that's just a very basic metric. It's better to contextualize and look through some of these prints. But as you can see here, we saw a $1.2 million order over here. This was above the ask for the 512 strike, and also for a very short-term expiration. This is the May OPEX, which is approaching at the end of this week. So they took these 15,000 contracts overall. Typically, and this is just something I've learned with experience, this type of size that's an even number like 15,000, 10,000, etc., that's typically a sign of a hedge order. Just something I've noticed in the past. So it's possible this is a hedge for events this week like OPEX. We also have CPI to look forward to on Wednesday of this week. So this is likely some type of hedging ahead of that event. Over here, though, a little bit more directional in my opinion. This is for the June OPEX expiration here. And you can see 1.6 million in premium above the ask for the 517 strike. And then a couple other ones like these call sells from down here. Nothing too insane, but also this is an uptick in overall put orders. Again, some of this is going to be hedging ahead of events this week. Like I said, we have CPI, we have OPEX, etc. However, this is a difference compared to what we saw a lot in especially Q1 of this year, where it was just overwhelmingly to the call side. So this is just something to monitor, nothing too directional just yet. But if we do see an uptick in overall puts, a lot of orders like this, especially going into this week, that can be a confirmation bias sign of a potential rollover in the market. Again, using this paired with dark pools to get a sense of key distribution zones / general areas of interest for sell side pressure, that can be very crucial in predicting some type of a rollover here in the market. So very critical for bears this week to get back into the bear flag on the S&P 500, and then over here on QQQ to actually break down below the bear flag. That can really kickstart momentum to the downside. Otherwise, in bull's favor, if you are a bull, you want to see them hold either within this bear flag into the end of the week, or to actually break out to the upside finally on QQQ, kind of similar to what we saw with the S&P 500, because if that can happen, then that really would make bears throw in the towel. We're probably going to see upside past all-time highs. Again, that's not my base case right now. I expect some type of breakdown, but we do need to see confirmation of either outcome to make some type of a trade strategy off of that, because when it does decide to break either to the downside or to the upside, that will start a new trend move. And whenever there is a trend move, it gets really aggressive in one side with that momentum, kind of like what we saw over here with this breakdown of previous consolidation on QQQ. We had a major downtick move, and then it just continued to trend to the downside before bouncing, and now we've been trending to the upside for a bit now. So a lot of volatility lately, but that does make a lot of opportunity in the market, both good and bad. And with that, I guess the last thing I'll share is the VIX. Funny how I just said there's a lot of volatility. Technically speaking, if you look back at the past like month or so, there has been a lot of volatility. But as you can see right now, volatility has been subdued in the near term, especially within the last week. We're in the mid 12s again on the VIX. So if you remember those videos all the way back in mid-April, I was talking about how I believe the VIX was overblown. We did have a final move to the upside into the 21s, as crazy as that sounds, and then just straight down afterwards. Really compressed overall in terms of volatility. We're in the 12s. So clearly participants are not that worried at the moment. Don't be surprised to see an uptick to around 13, maybe even 14 this week, just based on both CPI and OPEX. You're going to see some hedging ahead of time, especially if we were to get that desired outcome of a breakdown below the bear flag. We can see an uptick in VIX. But what this tells me right now is participants are not as hedged as they were previously. They're a bit more complacent, to be honest, after this upside move. A lot of people probably think we're going back to all-time highs at the moment. That can actually be dangerous if you are a bull to have that complacency. Until we're back to all-time highs, you need to be a bit more careful. All the breakdown move, kind of like what I shared with you on this bear flag. We'll see what happens this week. But again, watch for confirmation of either side for the break. And other than that, as always, appreciate you guys watching this video, and I will see you next time.